Welcome to our Security Observer webinar series. Each month, we promise to provide you with trends and tips that will help position you as the most trusted company when it comes to the transfer of money and issues of cybersecurity. I'm Tom, this is Tyler.
Thanks for joining. Last month, we reviewed top trends and tips to protect you, your company, and customers from fraud. If you were not able to attend, that webinar is available on CertifID.com on the resources page. I encourage you to go check it out. We had some great feedback as regards to our new series and how we are having a little bit more fun, flying a little bit more off the cuff, and inviting you all to participate and encouraging you to earn some free swag. So stay engaged, challenge us,
a lot of great stuff.
And we'll be sending you some stuff in the mail.
All right, what are we talking about today? So we're committed that this year from a theme was protect and prosper, many different topics. Today, we're going to take on the issue of preparing for your next insurance renewal. We're going to do a deep dive into some of the topics that we feel are most important as you approach that, including the types of insurance that are out there, speaking more to the title industry. So if you're a title agent, you're a law firm, if you're any type of organization that handles real estate transactions, this is strictly intended for you. So we're going to talk about types of insurance, this whole idea of coverage limits and sublimits that are creeping up now, current trends. We touched a little bit on that last month. We're going to get into that a little bit deeper. The 5 questions that you should ask your agent or your carrier to make sure you do have the coverage. And then we teased it out last month, but we're going to get into it, how Certified can actually help increase wire fraud protection on your E&O or cyber policies.
We're going to try to make insurance as fun as it can be here for 20 minutes.
It's so horrible. All right, so before we get started. For those of you that don't know, Certified protects the transfer of money both in and out of the escrow account. Doing so, our goal is to lower the risk of wire fraud and social engineering on every deal. We stand behind what I just mentioned. Our product comes with a $1 million per wire guarantee.
And we're also excited to announce that we are now integrated with Resware, RamQuest, and SoftPro Select. So, now more than ever, we're giving your team the ability to run Certified as smoothly and efficiently as possible in your operations.
Yeah, 100%. And if you're not using Certified and you want to be a company that provides the highest level of protection for money transfers, we're ready to connect. If you are a current customer, we're rolling out some really cool stuff that you'll continue to hear about in the coming weeks and months.
So before we dig in on our topic today, want to first give you a second to kind of introduce yourself. So obviously, Tom is the co-founder and CEO here at Certified, but for those of you who don't know, he is also a large title agency owner here in the state of Michigan, and I think that's really important as we talk about this topic and kind of let everyone know that you're going through this not only from a Certified perspective, but actually as a title agency owner.
No, that's exactly right. So attorney by trade turned large agency owner. We founded Sun Title back in 2005. So Lawrence, my partner, and I got into the space. And we have obviously learned a lot, like many of us that have started this journey into title and settlement. But this issue of insurance, we really wanted to refresh this conversation just from what we learned last summer in our renewal. So while we'll be speaking in segments around Certified, I will have more of my title agency owner attorney hat on. In the interest of full disclosure, I am not a licensed producer for professional lines or other coverage. So this is strictly educational content for you, if that makes sense. So cool. Well, let's dig in.
Yeah, let's do it. So what were the most common types of coverage for a title agent?
Yeah, apart from like the slip and fall, your general liability stuff, we want to get into the blocking and tackling of the risk of the work and our networks. So the 3 main forms of insurance center around errors and omissions, what we call E&O in the industry, otherwise known as professional liability. The fidelity insurance, like fidelity bonds, security bonds, some states require them, some don't. and then cyber. So we have E&O, fidelity, and cyber are the three segments of insurance that are most prevalent.
And are all of those required, or how do you think about them?
No, that's a good question. They're all, so E&O is required across the country to get an underwriter to actually sign an agency to do business on their paper, to be able to bind the underwriter for title insurance. So E&O across the country is required. Some states and other underwriters in certain markets require fidelity and require like crime policies.
Got it.
So I would say E&O required, fidelity usually state by state or market driven. Cyber's been optional. I think that could change in the future, but right now cyber's been optional.
Got it. All right. So insurance limits are often set by the company, and this is an important consideration for each title agent. Why don't you share a bit about what you think about as far as your insurance limits as an agency owner?
Yeah, I think the starting point as you're approaching a renewal or this conversation is, what is my risk? And the way we thought about this and think about it every year is, what's our transaction profile and has that changed year over year?
Sure.
So am I taking on more commercial? Am I doing more construction where I'm holding escrowed funds for monthly draws? Is there something about the way I'm doing the work or the type of work that has changed? Because that's got to bubble up. And I think from there, you have to look at, okay, what is my actual risk? Like if I had a total title failure, or I had a total escrow failure, what's that average cost where, because everyone knows we've been through a claim, the underwriter codes it as agent error, and then we've got to foot the bill to either defend against it or approach our E&O carrier for coverage. And I think that's the most important consideration, because the risk is, if you don't have that proper analysis and you're underinsured or overinsured, you're not hitting that sweet spot of just what's adequate coverage.
Yeah, right. Yeah, and I would imagine too, I mean, some of this is about like the risk that you see in your own region, in your own market, at your own agency, but then there's also some risks that are market-wide that everyone has to look at, and from the insurance carriers are also looking at as well.
Yeah, totally. In the sense that, many of us would have, tens of millions of dollar commercial deals, or if you're in an affluent residential district, what's the likelihood that you're going to have a $40 million claim on a commercial? You may have one segment that could relate to the value of an easement or a right-of-way or something like that, but not necessarily the whole thing.
Cool. So, okay, so let's dig a step further. How do per claim and annual aggregates work together?
Yeah, so just know that most policies are segmented, the coverage into a per claim, and then what's the overall ceiling of the policy. Most policies are like a 1 million, meaning you have 1 million per claim and you have 1 million in the aggregate. So if I had 4 claims at $250,000 a piece, and I hit my $1 million aggregate, that 5th claim, whatever that value is, would not be covered because you've met your aggregate. So a lot of times, I would recommend at least a $1 million per claim, and then we're typically a 1.2 or a 1.3, where we have a little more ceiling on the overall aggregate should some more than one claim come up in a renewal cycle or a 12-month period.
Makes sense.
Yep.
So as we know, with insurance, the devil lies in the details, and sublimits and conditions precedent. So can you explain how sublimits work in relation to the overall insurance policy?
Yeah, the old adage in insurance is the bold print giveth and the fine print taketh away, right? So there's a lot of fine print these days that have been taking this away.
That's why we both wore our glasses today, so we could help read the fine print.
All right, so sublimits. This is an area, guys, that if you haven't had a review or look specifically at the sublimits or the actual policy, you have to. So what we're seeing in the landscape is that insurance carriers are looking at some of these kind of micro risk packets that they're saying, look, I'll write $1 million, $2 million of E&O for you, but I need to sublimit down some of these specific risk categories that they're taking, that we're taking too high of losses on, right? So you could have a $2 million aggregate, but you could have sublimits, as low as 50,000 for specific risk claims that you may think you have $1 million in coverage for, but you have something very less, a lot less.
Got it. So how about conditions to coverage? What should a title agent know about these and how they affect their ability to trigger coverage in the event of a loss or claim?
Yeah, so again, the construct of the insurance policy, if you've ever read one, they're a gritty read, great for sleep aids. But it's basically, what's the granting? What is an insurable event, right? What are exclusions, and what are those conditions that trigger coverage? So specifically to answer your question, we're seeing additional conditions in some of these areas, especially some of these areas that are sublimited, that the title agent has to be able to, or the insured has to be able to prove they did things to even trigger the coverage, or could be an automatic denial.
And can you provide a specific example of something like that?
Yeah, there are many. One of the most current and what I'd say alarming, we'll get into this in a little bit, is this issue of electronic funds transfer, or what the industry is calling wire fraud coverage.
Sure.
So we've seen kind of a two-stepped approach over the last 24 months where sublimits have been added, and those sublimits continue to go down each year. So if you had $1 million in coverage 3 years ago, it's probably $250,000 or $100,000 in your renewal. And then they're strapping on more conditions precedent saying, hey, not only do you have to do callbacks, but you got to do callbacks and document them a certain way, or in a certain sequence, or there's denial of coverage. And we've had many cases that the title agent, thinking they were following that, weren't really understanding what that kind of waterfall of steps looks like, and they were denied coverage.
So meaning that they essentially filed the claim, then they went back, the insurance carrier said, hey, prove that you did these things, and they thought they were doing it appropriately, and in fact weren't.
Literally, you have to not only check the box, but be able to document how that box was checked.
Wow.
Okay. Big trend.
All right, so isn't it true that the insurance landscape is rapidly responding to these trends?
Yeah, we touched on this a little bit last month, and that trend line, similar to what I just mentioned in wire fraud, is that from what we've learned, the insurance community likes the title space. They understand settlement. They understand what we do from a professional liability standpoint. Like, what's the blocking and tackling, the 40-year search, the commitment, the clearance, the settlement statement prep, the delivery, the escrow, the disbursement, and then the final policy issuance, right? That continuum, they understand.
Well, I mean, that industry as a whole, claims are relatively low in title insurance. So from an underwriter perspective, it's a good business.
Yeah, no, it has been a really good business. And unless the underwriter has a problem, we don't have a problem on our E&O, because we don't have to trigger our E&O policy for an agent error or something like that. But
you learned something a little bit differently when you went to go renew, though.
Yeah, what we did during our renewal is we learned that as far as the E&O, so we have E&O and cyber, and we have fidelity, but let's take E&O and cyber. E&O carriers are saying, look, I understand what you do, and I want to ensure that you do what you do properly.
Right.
But as to anything related to like cyber or social engineering or wire fraud, we don't want that part of the business. We want you to take that on a cyber side. So that was
just decoupling themselves and kind of distancing themselves from that.
It's a good way to say it. They're just kind of bifurcating these worlds, and we haven't had claims, and our rates, just kind of continue to tick up because other, it's a pooled model. So other people that aren't doing the best practices, we that are kind of backfilling that.
So then how do you think about that, like on the cyber insurance side, and how do you actually decouple your business to say, well, cyber's over here and our business over here, when everybody today is a digital business to some regard?
Yeah, well, some of the irony that I find, and I'm talking to myself as much as I am addressing the group here, is while we know a lot about insurance and title insurance and all that, there's been such movement in the E&O and cyberspace that I think the biggest thing you can do is align yourself with somebody that really understands both worlds and the interaction. We'll get into this in a little bit more in detail, but I think that's the best thing you can do is be honest with who you're working with. Are they an expert in E&O? Do they have capability in cyber? And how do those worlds kind of meet? Because the interesting thing about E&O, there's only a few kind of standard template policies. For cyber, there's over 70 policies floating around. There's just it's literally the Wild West where this whole threat came on.
Yeah, sure.
Insurance
happening fast, right? It's changed so much faster.
Exactly.
Yeah,
yep.
That makes sense. All right. So as an agent, if you had an upcoming renewal, what questions should you be asking to prepare yourself?
So these are not exclusive, but a few come to mind. I think the first thing is just, again, taking that minute to take a step back. How am I doing my business? What business am I doing? And does my E&O cover the work that I'm actually performing? So when we interact with our agent, we put very plain English emails together to say, hey, you know, this is the type of work. Am I covered for this? I mean, use some of those examples that you might have questions for and make sure that you get in writing documentation back. If it's something special, you can always provide an endorsement on your policy that could cover those kind of niche little, you know, angles. Because countrywide, the way that we perform title and settlement is different. I mean, the end product, transferring marketable title from seller to buyer, is the same. But you need to know specifically, am I covered for blank?
Right.
And then secondly, does the policy stack cover all of the services and offerings that I'm providing? So it's a little deeper analysis of what I just mentioned to say, okay, the work I'm doing, but how am I doing it? Am I adding, do I have any other services or bolt ups that I've provided my customer? Do I just do straight escrow? Do I do, you know, courtesy closings where I don't have a file? I mean, there are examples where, you know, could I send one of my notaries out just because the law firm needs someone there? I mean, all those things, unfortunately, are just risk profiles.
Does that go back a little bit to what you mentioned before around like thinking that you were doing things appropriately and then going to get a claim and then them saying, no, this is being denied, right? Get that documented before you go in.
Yeah, because they could argue you didn't have a direct relationship with this customer. There was they didn't pay. You did this, you know, you signed at the nursing home or, you know, right before surgery of somebody, and then there's a question of, you know, mental capacity or whatever happened. I'm just using this as an example, but that's exactly right.
Sure.
Be honest, what in the whole scope of things, what are you doing? The next would be the new and emerging threats: wire fraud, ransomware, theft of data, compliance with all the state laws and regulations around data privacy and information security. Do I have adequate coverage if one of those triggering events happens? The next deals with, are my per claim and aggregate limits actually, are they adequate for what I'm doing? And maybe think about some of those unforeseen circumstances, you know, and what would happen. And the other is and we have a lot of large clients and people that grow through acquisition or have affiliated businesses. Just think about the whole kind of tapestry of companies that are operating under your umbrella or that you may be sourcing resources to. And the issue of, do I have all of the enterprises covered? You know, do I have predecessor or current liability that I'm inheriting through some of the movements in market?
That's great. All right, so last month we mentioned to you, kind of teased out a little bit, that we've been working on something that would help you get more coverage if you were a certified customer. And we wanted to elaborate on that a little bit more. We believe here at Certified that, you know, not all title companies are made equal, and that the ones that do the work and that put the processes in place and adopt new technologies to help prevent them from fraud should be rewarded.
Yeah.
And we did a lot of work not only to help prove that out, but to actually work with the insurance company or insurance industry to kind of help bring light on that. And that, you know, same as if you had a home and you put a smoke detector in, you're more likely to get better policy and coverage there than if you don't, right? Totally. And so we really wanted to make it feel and help our customers get rewarded for being really best in breed.
Yeah, so to that end, all good points, Tyler. We got to work on this issue of, think of it, the global insurance markets, looking at title and settlement, especially around the area of wire fraud, and essentially them wanting to leave a burning building, saying, look, I get what you do on the professional side, but this wire fraud issue, we're just taking too many claims, too much indemnity exposure, and we're going to sublimit or just stop endorsing that coverage altogether. So happy to say that us, along with several partners around the country that we worked with that are just so skilled in professional lines coverage, we're able to convince Lloyd's that it's still a good idea. There's a way to manage and mitigate this risk. The industry needs protection for those unforeseen events. So now for certified customers, we have a new program. They call it the Certified Endorsement at Lloyd's, where you'll be able to double the scope of your coverage. So you'll be covering inbound and outbound on an E&O endorsement, and doubling what I understand are most available limits are $250,000 per wire. They're going to ratchet those up to $500,000. So,
and I mean, this is huge, right? Like they were looking at this as a distressed asset in a lot of ways and concerned around how they could manage it. And you know, you did a lot of work on this front too to get in front of them and say, hey, title companies are really trying and they need to be covered in order for us to be able to do business. Because I love the analogy you use sometimes too, where like, you know, on an outgoing, you don't know when you could get hit with a fraud, right? You don't get to pick. It's not like you purchase a vehicle and you know exactly how much it is, and if you were to total it, you know what you could lose. In wire fraud, it could be a $5,000 earnest money deposit, or it could be a $5 million wire.
Yeah, that's exactly true. So we did at our renewal. This is where this kind of fire in us lit last summer to say, okay, this is not sustainable. Our title agency needs more coverage in this area, so we're going to get to work, and that's exactly what we did. So we're proud not only of our team, our partners, but also this offering for the industry, because it does signal that, you know, we do have value and what we do matters, but we do also need that like just extra layer of protection.
Totally.
Yep.
Cool. Well, if you want to learn more about how to take advantage of this additional policy, you are free to email us at sales@certified.com, and we will walk you through the details.
Love to talk to you about it. It's super cool. So
awesome. So we've had a couple questions come in that we'd like to address here as we finish up today's webinar. First one is, how can I best avoid an increase in my policy premium?
Don't have claims. Guys, you have to understand that underwriters are human beings. And underwriters understand stories, and you have to be your own advocate to just prove what you've done. If you're Alta best practice compliant and you have a third-party attestation for that compliance, if you have a well-defined process that walks through, I mean, look at the coverable areas and show them how every step of your workflow is mitigating risk, right? If you run a 40-year search, do you have a quality control before that's released in the form of a commitment? Do you have dual authentication around setting up and releasing a wire? Do you have daily reconciliation around your escrow account? You know, do you have adequate insurance, and have you had that without claim? So don't just, you know, fill out the standard app that hasn't changed in 30 years. Go off script, record a video, I always say, see attached A. I paint a picture every time we do a renewal. This is what we're doing. This is why it matters. If you can get right to the underwriter and have an honest conversation with them about why you're different, that's the thing that matters.
Totally.
And if you're working with a carrier that doesn't want to hear that, you need to switch carriers. Honestly, they need to be able to spend the time to get to know you, because just like all title agents are created equal, not all E&O carriers and certainly agents are willing to roll up their sleeves, do the work, and say, look, I've got this class of people, and then I have this brand. And this brand is one that we should get on a preferred pricing schedule for. So,
well said.
Yeah.
Well said. All right. Next question. What's the best thing I can do to make sure my coverage isn't denied?
So this is an onion that has a lot of layers in it. The first question you have to ask is, have you bundled different brands within one, or different companies within one umbrella policy? Okay. So there are some carriers that say, hey, my primary brand is, you know, AAA title, but I have affiliated brands, and it's easier just to bundle them and add them as additional insureds. And you can do that, and you can save money. But if you have other partners that are owners in those affiliated brands, you may put them at risk because you may have a claim over here on one affiliated brand that at come renewal time, it could affect downstream or cross-stream everyone else. So I think the biggest thing that you can make sure is, one, you don't have a claim. If you do have a claim, that all of those triggering events, look, you get drawn into things that are absolutely outside of your control. Sure. You can get sued for anything that anybody can just concoct and imagine and file in a suit that you have to defend against. It doesn't mean you did anything wrong, but it means you tendered a claim. Right. So always be transparent with your carrier. And I can't say enough, the documentation and how you handle those issues can separate you from someone that maybe is denied coverage in the future, if there is a claim and they have to pay out, or somebody that says, hey, this one was just a risk. I mean, it's insurance, guys. Collect premium in exchange for risk. And we just have to make sure that they understand that. But that's a great question.
All right, well, we're out of time for this month's webinar. We appreciate you joining and look forward to seeing you next month.
Awesome. Great.
Right.
Take care, man.